Most people already know that investing is important. The problem is not usually the lack of awareness on the subject, it's more of the uncertainty of what it entails. People often understand the benefits of starting investing, but still delay starting. Waiting can feel more responsible until you maybe learn more about the subject, but that also avoids the immediate risk of investing. And delaying starting doing something with your money is a financial decision that you are making. So in this video, I kind of want to talk about the psychological reasons people wait on starting to invest their money, and not just the mathematical benefits of starting while you're very young. The first point I want to make is that people think they need more money to start investing. I think many beginners feel you might need a couple $1,000s or $1,000 to start investing, and I think people see small amounts and it feels pointless when they compare it to large portfolios, especially coming right out of school. Most people don't make that much money, and they might focus on, hey, when I get a raise, I'll start, or when I get a bonus, I'll start. And then I think people can kind of move into lifestyle inflation then, as they're just, when I get another raise, I'll start, and they can kind of kick the can down the road. And that's when, the lifestyle inflation will kick in and start eating even more of their disposable income that they could be investing. And this will cause the amount they need to start investing to get higher and higher and higher. And I think starting with a small amount builds, familiarity with the, topic, and you can start building consistency. Maybe every paycheck you're putting a certain amount of dollars in or something like that. And a small contribution will not, create an instantly large portfolio, but it can establish a habit. And this is money that is not for, living expenses or anything like that. You should still be able to cover your essentials while investing. The next topic I want to talk about is people are afraid of losing money. I think investment losses are visible. You can open your app and see how much you lost today. And seeing your account decline produces, an emotional reaction instantly, whether it's good or bad. But I talked about this in another video. Holding your money in cash, you're also losing money. It's just an invisible loss because inflation is eating your money, but it doesn't actually take it out of your account. And people often treat market volatility as proof that the, investing in the markets are unsafe. But the truth is they've always been moving up and down all hours of the day for, as long as it's been a thing. And people may confuse temporary price declines with permanent losses. Just because the stock goes down $1 per share and, you lose $1 per share doesn't mean that it won't come back or that, it won't grow exponentially in the future. And I think so many people have heard of the story of, losing so much money in the stock market or, failed individual stocks that it can kind of put them off from investing. And I think a lot of family experiences can change people's views on investing. If you look at a lot of the older generation, a lot of them like to keep more cash because maybe they lived through more economically uncertain time periods compared to people in their 40s. Losing money generally feels more painful than gaining the same amount. The fear of loss is a greater motivator. Fear of losing $1,000 is higher than gaining $1,000. And I think that can really play into people that are, debating to start investing, whether they should or not. I think they tend to think like that. And if you look at the long-term history of the entire stock market, if I believe any 30-year period that you've been invested consistently, you'll make money. So as long as you're just investing and holding, it's not really an issue if it goes down, this year. The next reason I see people delaying investing is waiting for the perfect time. People want to buy when the prices are low, and I try to do that as well. And the problem is that low prices occur when, the news and the economy feel particularly frightening. So I think new investors would be even less likely to join the market, even though prices are at an all-time low or something like that, or a 10-year low or 5-year low. When the market starts to feel safe again, it's when the market has already recovered and all the gains have been reinstated. And that's when a new investor would be like, oh, maybe now's a good time to get in, right? But they could have bought, a couple months earlier at a lot lower prices. So that's why it's important to not wait for the perfect time and just start right now. And perfect entry points are, easy to identify after the fact and very difficult to see in the real time. And especially today with the constant changing news and technology and things like that, we don't even know what the next year is going to look like. So that's why it's important to get your money in now. And I hear a lot of, people that I talk to in real life talk about they think investing is very complicated. And beginners usually, encounter unfamiliar terms like a ETF or an index fund. And that's kind of the whole thing for people that sell you these products. They use terms you don't understand to make it feel like they know more than you and you should give them their money. When in reality, you can learn a lot about investing with a solid, 10 to 15 YouTube videos, and you'll probably be able to come out a multi-millionaire if you stay consistent with your investing off that advice. And I think that people think they need to understand, everything in the entire financial system before they start investing, which that just isn't the case. I do not support putting money into securities that you don't even know what they are or what they do. So think you should, at least learn what you're putting your money into before, but you don't need to have everything figured out to start. I think that people also worry with investing being too complicated that they'll make the wrong decision. And yeah, there are people that can help you with that sort of thing, like financial professionals, but I am not one of them. Learning is important when it comes to investing and that sort of thing, but total mastery of the subject isn't required before starting. And I see a lot of people, they talk about, what do I even buy in my portfolio? And people want their first investment to be the best thing for them. And they compare, funds, returns, fees, and recommendations, right? And they worry that another investment will outperform whatever they choose, when you should be choosing what fits your financial goals the best. And nowadays, you're able to see how things have returned on a 5-year, 10-year average. And if you're happy with the returns they've produced and since inception, then I would go with that fund or whatever it is you're investing in. I think a lot of people delay investing as well because the reward feels too far away. The long compounding process of like 40 years, if you're starting in your 20s, right? It feels like you're not getting any reward till later in life, and it might feel like, what's the problem if I wait an extra year or two, right? But starting, while you're younger is significantly better. At 25 versus 35, investing the same amount of money, your gains on the 25-year-old are going to be significantly higher. The further away it feels is honestly the better position to be in and actually do something about it. A lot of people also think they need to fix everything in their life first. Some people don't invest till their debt's gone, or till they have a perfect emergency fund, or they have a house. And financial goals don't always need to happen at one time. You can do a lot of these together. It might be a lot easier to get them done if you focus on them one by one, but I don't want people to feel that they need to focus on everything one by one. I think there's a healthy mix of things that you can be doing all the time in your life. Whether you even don't have a house, don't have a car, don't have anything invested, you can do all of those sort of together. And obviously, if any emergency comes up, I would focus on that, or any high interest debt, focus on that. And yeah, these are just some things that I've seen people talk about in my life, and that's just kind of my opinion on some of them. Let me know what you guys think. Thanks for watching.